Hi, and welcome to the Market Alert for Friday, the 24th of July 2015. Starting off in the 5-minute chart, you can see the market was fairly sideways for most of the pre-market session, and then prices coming down to the 17,850 and struggling with this area in this pre-market session around 13:45, quarter to 2 in the afternoon, and then you see the market open. And then 5 minutes later we have a sell PTI which works its way down to the psychological level there of 17,800, and you can see also this is the scalp level, the market finding support, so it's a case of collecting the profits here. And the reason for that, of course, is the market didn't actually break through the actual support level with any other red bars. It found support, the volume dropped off, as you can see there, so the selling disappeared, and then the market started to reverse and move back to the upside with a triple X. The most on this, or the maximum, was 20 points. To get 20 points would have been difficult because obviously we're looking for the market to get back to the psychological level, and you can see there the market coming back towards break even and attempting to go up again, and this should sort of set off a warning signal that the market isn't going back above the scalp. So at this point you've got one of two things to do: to either move the stop to break even just to see if the market will break through, or to collect the profits, or alternatively you can as the market starts to make these rising lows, these higher lows, you can tuck underneath, and you would have seen, just move this one out of the way, you can see there that the market would have produced a small profit, be of about 5 points without the spread, or at worst case a break even, because the market's showing no green bars, and again you can see it's coming back up to the previous scalp but failing to move higher. The volume is low, there's no participation in this move, so you can see there that it's worth actually getting out. And then the market heads south, we get into the quiet session, and that's how the market remains for the duration. So again, having made a few points in the morning session, it's a case of leaving it at the moment because there's no major impact news items around for this week, or haven't been for this week. In the daily chart, you can see the market moving lower, even though we had buying pressure the day before. There is considerable pressure on this market. There's no reason for the market to move higher at the moment. Any sort of rally and any short signals really are the best signals at the moment as this starts to move lower. Notice also the increase in volume as well yesterday. Some genuine selling around there, whether it's the weakness is following on from the disappointing results from Apple, but that of course is traded in the Nasdaq, but then again the sort of knock-on effect across the market showing again that the economy is slowing as Apple's results disappoint the market. In today's news, let's have a look. 3 p.m. All we've got is new home sales. These are forecast to be slightly lower. So again, coming out below the forecasted figure, we'll see a bit of weakness in this market throughout Friday afternoon, and in particular Friday evening as well. If there's no other economic news items, you manage to get a couple of trades or a trade in the first part of today's session, then just take it and leave it, because Fridays are notoriously quiet anyway, as people finish early and then head off for the weekend. Right, so just a quick look at the implied volatility. 1072 for Wednesday. Quick refresh, 1136, which you'd expect as the market moved lower during yesterday's session. So the implied volatility being marked up there by the professionals, seeing some potential downside risk there at the moment. Right, that's it for me for today. I will see you in Monday's edition. Have a great weekend, and as ever, thank you for your support and also for watching. See you in the next one.